You're live.
Hey, everybody. It's that time of the week again, and we are live. Welcome, everybody. We're going to be discussing how to get into pre-IPO companies like Coinbase before $100 billion, which is exactly what I did. And I'd like to share some insights because I had a lot of questions on the Slido link. So if you are new to the channel, I have been going live each and every day on Twitter because I've been doing a public commitment to health, and I hold a personal belief that if you do anything consistently for 90 days, then it becomes an addiction. And if you're going to get addicted to anything, you might as well train yourself to be addicted to things that support you and your goals rather than punish you and your goals. I've been abusing my body for about a decade now, and now I am doing this public commitment to health. And as part of it, I've been answering a question on a live stream, one question in a short form content every day on Twitter. And one of them was all about, they wanted me to dig a lot deeper into how you can invest in companies. So if you want the short form content, make sure you follow me on Twitter at Simon Dixon Twit. And if you want the long form content, this is where we do 1 hour, the first half on the content, which I'm going to be sharing with you how to invest in pre-IPO companies in the Bitcoin and FinTech space. And I'll share some case studies of different companies and how our investors and myself have been involved in those. And if you want the short form content, make sure you follow me on Twitter, long form, subscribe to the YouTube channel. So we're just about to jump into the content. Just before we do, please do give us a like. The more likes we get in the beginning, the more YouTube will rank us, and the more they rank us, the more we can support people in getting on the right side of the changes that are happening in our financial system right now. If you're new to the channel, a couple of other things we can do. Firstly is if you'd like a free copy of my book, Bank to the Future, Protect Your Future Before Governments Go Bust. Here's the Mandarin version, here's the English version. You can get a free copy of the English version as a digital copy on banktothefuture.com/book. No, sorry, I just made that up. It's retirementplanb.com/book, where you can get that free copy. And you can also get a free video series on how to invest in the Great Depression of the 2020s. Little trivia, in case you didn't know, it was the first published book in the world to include Bitcoin, and it was launched at the very first Bitcoin conference in the world where I spoke in Prague. So let's jump straight into the content now. Now, just before, we want to build up some questions for the second half, because the second half of this is an AMA. And if you want to get your questions answered, then no account needed, but head over to sli.do. That's sli.do, Slido. And in the hashtag box, put in SD4. We don't have many questions yet, but we'd like to build them up. So if you've got a burning question, as I'm giving this presentation, put it in there. And whichever one gets the most upvotes, please upvote other people's questions if you haven't got any of your own. We will be taking in the second half of this segment.
Simon.
So, Azad.
Simon, sorry to interrupt. Can you allow me to share screen so I can actually bring up that QR code for people to scan and start submitting their questions?
Okay, let me update the settings. So now Azad, who's moderating, can share screens and try and do some visual stimulus while I'm talking. I think Azad is just about to share a link to the Slido page. And you can scan that QR code to make it easier. Oh, it's looking nice and branded and purple today. We like that. And you can scan that QR code. And here's the questions we got so far. And we'll be taking them from the top. So upvote other people's questions, and we'll be covering those shortly. So a little story about why I started investing in private equity and how I did it. And I'll give some case studies along the way, and of course, share how you can do it too. On the screen right now, there's the book page, Retirement Plan B/book. This is where you can get that free digital copy of my book and the 4-part video series on the Great Depression of the 2020s and how to prepare for that. So when I wrote this book, I had a philosophy that was covered in this book about 7 hugely disruptive technologies that was going to change the future of finance and impact everybody's lives. And I wanted as many people to be prepared for that in terms of monetary reform and banking reform. So I was what's known as a monetary reformer, which is a community of before Bitcoin was created. And in that community, it used to be a bunch of us. I used to live in the UK when I was part of that community. But we used to meet up once a year in this meeting called Bromsgrove, which was a bunch of retired people. And because I was of a younger generation, they were always looking at me for technical solutions on how to implement things. And so that's really where I first started being introduced to Bitcoin, because we were trying to create a sustainable bank at the time. And we wanted to create a non-fractional reserve bank so that people could own their own money, spend their own money, and not be at the mercy of the central banks printing money. That's what we were trying to achieve. And so I wrote this book, Bank to the Future, Protect Your Future Before Governments Go Bust. And part of it was understanding digital money. And that made me cover a little bit on Bitcoin in the book. And so decided to launch it at the first Bitcoin conference. And there was a little startup pitching at that conference. It was sponsored by a company called Mt. Gox, who's long gone now. They went bust, and they were one of the early exchanges in the crypto space. Infamous story. But there was a company pitching called BitPay. And a friend of mine who I met at the conference, Max Kaiser, we decided to make an investment. We put together a fund called Bitcoin Capital way back in the day, and we started investing in the industry. We had a philosophy, and the philosophy that I came up with in Bank to the Future was that the future of finance looks very different from the past, and I want to invest in everything that might have an impact. Some might fail, some might succeed, but I wanted to be diversified across the whole industry and see if we could fund companies that could change the future of banking forever. One of the first investments we made was in Bitcoin itself. I, at the time, saw it as technology that could be the backbone of a sustainable banking system. I didn't understand too much about it at the time, but I could see the vision and where it was going. And so I wanted to invest in as many companies. Now, the good thing about investing in private equity, and the bad thing for some people, is that firstly, it's very hard to get access to these deals. You traditionally have to be a venture capitalist, and a venture capitalist spends years building their brand and reputation, raising lots of money from institutional and pension funds. And then they pull all that money together and they build a reputation and get access to private equity deals. Now, none of the venture capitalists were interested in investing in Bitcoin companies at the time. So we found a very easy niche for ourselves, which was no one was interested in investing in these companies, but we shared a common vision that we believe that Bitcoin could be a part of the future of finance. And so the company that I co-founded with Bliss Dixon, Bank to the Future, we pivoted it to an online investment platform. It was a simple philosophy. The philosophy was that if we believe the future of finance looks very different from the past, how can we get access to deals? And the way to do that was to pool it together with other investors. And so we went upon this journey of turning banktothefuture.com into a company that could fund all of the other companies that were going to change the future of finance. And that was our vision for how we were going to build a sustainable financial system. So luckily, our venture capitalists turned out to be Bitcoin because Bitcoin did well. The company invested in Bitcoin, and we started sharing some of that and investing in other companies. And so we wanted to do it in a way where we could diversify widely, though, because here's the trick. You have what's known as public companies and private companies. Now, public companies are the ones that you know about, that your pension invests in, that are floated on a stock market. It's a Tesla, it's an Apple, and it's going to be a Coinbase and various other companies that we invested in early, like Robinhood as well. I know Ripple Labs is looking to go public. Some of our other companies that we invested in are looking to go public, like Exodus, who are doing a smaller mini IPO in what's known as a Reg A Plus offering in the US. But once they go public, they are tradable on a stock market, and they have a well-defined share price, which is based upon supply and demand. They have lots of disclosure requirements, which is why early stage companies just can't simply afford to meet many of these requirements of being a public company. So there is the difference. The difference is that a public company is traded on a recognized stock exchange. Excuse me, they have to meet certain disclosure requirements. They have to meet lots of requirements, and it costs a lot of money to meet those requirements. Then you have private companies. Private companies tend to sell their shares to a restricted number of investors. And what we wanted to do at banktothefuture.com is, because no venture capitalist was interested in investing in our industry until a lot later, we wanted to create a way whereby people that just wanted to invest $1,000 or more in a bunch of companies. So let's say you meet the requirements. So regulators all around the world have requirements of who can invest in private companies. They're either a professional, sophisticated, high net worth, qualifying, and each country has a different thing. So we had to go around finding out all these different rules, all these different laws, and it took us about 3 years until we actually persuaded a regulator to allow for such a methodology for investing. Now, what's interesting is the work that we did in the UK at the time for that 3 years was noticed by President Obama, and President Obama, a working group, put together something called the Jobs Act, which reinvented securities laws that in the US was created in 1933 after the last Great Depression, when there were crazy rampant speculation in securities. And so in order to try and protect people from those products that led into the Great Depression of the 30s, the 1930s, they created the Federal Reserve Act was created in I'm doing well today. In 19, the Securities and Exchange Act was created in 33. And it hadn't changed very much since then. President Obama picked up this work and actually created something called the Jobs Act, which changed securities laws forever and is still working on updating those. So very proud that it had such an impact, all from this thing, this little of trying to figure out how to fund companies that were building the future of finance. And so that's the background and the story. And we created this platform, banktothefuture.com, whereby people could invest in private equity, but there's different to public equity, public shares that your pension invests in. One, you don't have the same level of information. You don't have all the regulatory oversight because they just simply, when they're starting early, companies like Kraken, who we were invested in their very early funding rounds, they were not able to meet these requirements until more recently when they became multi-billion-dollar unicorns like they are today. But we were able to invest at, early in a 20 million valuation, and other investors on Bank to the Future got exposure to these companies. Now, later, Kraken became worth $4 billion in their last funding round, and more investors, over 2,000 investors on Bank to the Future, were able to participate in that round. And now they're looking at their next to go public at a minimum of $10 billion. But that is only the minimum. We saw the other companies that we were able to invest in through our platform, like Coinbase, are now going public for $100 billion. But if you wanted to get into them early, then you needed to be a member of Bank to the Future, that we could pull together those investments. And we spent a lot of time creating a structure whereby people could co-invest with each other. We put together a structure. They don't have to meet that public company requirement. And then when the companies go public, which is when most people will be looking at investing, you've benefited just like the professional venture capitalists from all the upside. Now, I do have to give some caveats. Most companies fail. So of the over 100 companies that we've listed on banktothefuture.com, about 10 of them, maybe 10 or even 15, have gone bust. About over 10 of them have become unicorn companies, which means they're worth over $1 billion. So the game is diversification. So you ask, why would a qualifying investor want to invest as little as $1,000 in a company? And the answer to that is because they want to diversify wide, which is exactly why we created banktothefuture.com, so that we could co-invest with other people that wanted to invest with us in building the future of finance. The other thing that's very different with private equity is that there is no public market. So you can't sell those shares easily. So we set about trying to change that. And we are still in that process, and I'll share with you how we did. But the good thing about that is that when you can't sell them, it means you have to hold them long term. And here's what we've learned. At banktothefuture.com, we've worked with over 100,000 investors that qualify to invest in this asset class. If you want to know if you qualify, you just simply register, click the identity tab, and it will ask you to go through a process of seeing if you qualify in your jurisdiction. And that's dependent upon your local, what's known as securities laws, because these are securities, these are shares. Securities laws is jargon for stocks and shares and products that are offered. And so the major difference is that you're forced to hold them long term, because most companies will fail. We've got a good record at Bank to the Future in terms of how many have succeeded and become multi-billion-dollar unicorns. But you're still going to have some that will fail. So you diversify, and let's say somebody has $1 million of investable funds. Let's take it. Let's just state, and this number scales down whatever you want to do. They may want to put 5% in a risky asset class like private equity. And so that's $50,000, and they may want to invest in 50 companies or 10 companies. And so they put $5,000 in each company, and they build a portfolio of 10 companies, and then they can diversify across a different industry. Now, people get very impatient, but the ones that have become very wealthy through Bank to the Future were the ones that were very patient. Just the other day, several investors invested in something like, we put together a company called Bitcoin Capital that I talked about. It invested in many of the early companies, and it invested in a mining rig and paid out thousands of Bitcoin dividends. Every single day, we were paying out Bitcoin dividends. Some people just literally left those Bitcoins in their account because they were thinking long term. And they ended up with exposure to companies like Kraken, like Circle, like Coinbase, like Robinhood, like Bitfinex, like BitStamp, like Shapeshift, like BitPay, like many of the other companies. And they left their Bitcoin in there right till the end, and they're logging in right now. And just the dividends that they received, now that Bitcoin is approaching 60,000 US dollars, has been an incredible higher return on investment than anything. But obviously, some of the companies went bust, some things didn't work out. And that's the way that we've been doing it. Some of them also took their funds, and we put together, for example, a company called the Ether mining back security, where we were mining Ethereum and Ether from very beginning, and paying out tens of thousands of Ether that was being paid as a daily dividend backed by mining. And many of the people, they got their first investment in the industry. We paid them out thousands of Bitcoin in dividends. They then used that. They invested in the Ether mining back security. They ended up with their Ether, and then they diversified. Now, here's the main advantage of investing in private equity. If you, for example, what I made sure that we were doing is investing in the exchanges. So with the exchanges, they perform whatever is happening in the crypto market. So if Bitcoin is crashing like crazy, everyone jumps over to an exchange, they start selling, they start leveraging, they start shorting. And if the market's crashing, crypto exchanges like Kraken, like Bitfinex, like BitStamp, they make good amount of money when the market's crashing. When the market's bull, they make really good money. Their quiet times are when the market is sideways, which in Bitcoin and crypto is not that often. And so it makes you hold it long term. And therefore that can normalize out your portfolio. So if you were on retirementplanb.com and you watched that 4-part video series, I talked about the 5 investment strategies for my Bitcoin retirement plan B. That is purchasing Bitcoin, taking some of it, lending Bitcoin, lending Ether, staking Ether, taking some, putting it into a stable coin, lending that stable coin, and building a portfolio of private equity to normalize that. And then obviously, based upon your situation, you need to adjust that, which is what we do with our retirement plan B customers. But that was sharing exactly how I'm investing at the moment. You can still get that free video series on the page, but this is how I built that private equity portfolio. So I'm just going to take a quick water break. And while I'm doing that, do me a favor. If you've enjoyed this, if you've learned something, hit that like button and make sure you go over to sli.do while I take that water break, upvote some other people's questions or ask that question. I'll take a quick water break. Azad will share the link so that you can go over there. And then we'll continue with how we try to change the liquidity side and how to make returns. Okay, awesome. Yeah, please do hit that like button. It helps us make sure that we actually, YouTube starts ranking us, and it's already started to work. Last week, we got a lot more likes, and I think we may have been unshadow banned. Some people that said they don't get notifications, got notifications. Who knows how it works, but your help is really helping us make sure that we get this content out to a wider audience. So the next phase at Bank to the Future was, well, if people are making returns, sometimes they don't want to hold it for the long term. Life gets in the way. They might need to do something. Were you saying something there, Azad, or was that me? No. Life gets in the way. They may want to sell something. And so a while back, we actually launched a token called the Bank to the Future token. And the Bank to the Future token was our way of our investors wanted a mechanism for actually getting early access to deals, also getting rewarded as they build their portfolio. And so we launched the Bank to the Future token, which if people stake some of those tokens and they deposit them on the platform, here's the old page when we did the token sale, then they can put it on the platform. This isn't available to US, unfortunately, just to the different rules and regulations there. But if they put them on the platform, they can get early access to all the deals on Bank to the Future. They get a 48-hour head start. And if they stake more of them and put them on the platform, the more they invest, the more they build their portfolio. Each and every time they invest, they get rewards. And we used it for what we call our secondary market. Now, when you're on banktothefuture.com, if you head over, there's a couple of links. One of them is Start Investing, which is the traditional one that we've done from the beginning, where companies want to sell their shares and you can start investing in those companies. But if you also head over to the Start Trading link, this is where you can invest in companies that other investors may want to sell. And so if you click that, the green button on there right now, you can see the company that other investors are looking to sell. So we've got, Bitfinex equity, we've got Kraken, we've got Ripple Labs, the company, we've got Circle that is behind the USDC stablecoin. You've got Mexican Exchange, BitAirTM, Shapeshift, BitPay, and many others. Now, you're not actually buying the underlying company because remember, these are not public companies. They're still private companies. We had to take Coinbase off of here because they are going public. And so everybody that invested in the private shares at a significantly lower valuation will be swapping out their shares, which is why we stopped the market for Coinbase shares, for their public shares at the much higher valuation. And this is when the majority of people are going to be getting in. So everyone else has to wait for the company to go public. And once Coinbase is worth $100 billion, I'm sure there's great upside from there. And I'll still be holding my shares for the long term, because I believe that our market and our industry has got a lot further to go. And I think that Coinbase is going to be doing incredible things after their public offering. But being able to get in early was where the real returns are made. And so by being able to get into these earlier private equity deals, and us lowering the bar by making it easier to diversify and invest lower sums so that you could spread it across so that the losers lose and you can ride out the winners, we're now starting to get a real wave. So if you look at some of these companies on there, Coinbase about to go public for $100 billion on the public markets. Bitfinex, they paid out all of their 2017, 2018 returns in dividends, and they had about a 16x increase in share price on our secondary market. You've got Kraken, which started with the first round was at $20 million, then $4 billion, and now they're trading at several times above that. And our investors are able to sell them on the secondary market, and people that miss the round are able to buy them on the secondary market. And I still dollar cost average in. So I buy each and every month, because the philosophy of, and I'm not saying this is not financial advice, this is how I do things, but the philosophy of the future of finance looking very different from the past is just getting started now. So as an industry play, I believe that our industry, our sector is only just getting started. And there's so much further to go. And I like to normalize that and average that out by just increasing my positions every month and doing that on a regular basis. So this is how I built my portfolio of Bitcoin, FinTech, and crypto companies. We've now done over 125 different companies in the industry. As we said, some go bust, others have done incredibly well, and we've got a great track record of being earlier to multi-billion-dollar unicorns. And so, yeah, that's banktothefuture.com is the request. In terms of the Bank to the Future token, that is a utility token. It's traded on cryptocurrency exchanges like Bitfinex, like Uniswap, like Huobi, and various others. You can check it out on coinmarketcap.com. Just put in BFT as the ticker symbol. And if you stake those, you get early access to deals. We've currently got 5 deals coming up. One of those that is we've been made publicly available is Celsius, for example, which has gone through a ginormous growth curve and already produced over 25 times return from those that invested in it last year. So it's a high growth area. It's high risk, high return. There are some downsides. I should warn you, make sure you read the risk warnings. Early stage companies very rarely pay dividends. They tend to go in for growth. Most of them will fail. If they fail, you lose your money. They issue more shares in the future. So you can sometimes get diluted if they raise at lower valuations. There's sometimes a lack of transparency in information rights. So it's a bit tricky to get information and various other things. You may not have voting rights. So there's various things that we always warn you against. And before actually making an investment on the platform, we put you through a quiz to make sure that you understand the product, suitability, and various other things that we do just to make sure that you're somebody that really understands how to invest. But it's a game, it's long-term, it's high risk return. You're building a portfolio for, even for the next 10 years sometimes is the way that the significant wealth has been built. And we have built a lot of high net worth investors through the platform. So hope you enjoyed that. And now I'm going to turn over to your questions. And so hopefully we can tailor this to the questions that you have. So Azad, should we move over to the Slido board now?
Yep, just gonna share the screen.
Okay, please, while we're waiting, hit that like button. I don't like asking, but I have to ask because it really helps get the algorithms moving exactly on the halfway mark. So we've got another 30 minutes to answer as many questions. Please do like, please do share, and remember to subscribe if you're not a subscriber already, and let us know what topics you'd like us to cover next week.
Okay, first question from John Moylan. Simon, can you cover now or at some stage the safest way to exit crypto and transfer to a bank account? Can we trust BitStamp, Binance, etc., or should we have direct contact with a broker like Caleb and Brown? Love your content, by the way.
Thank you very much. So yes, this is a big problem in our industry. When you sell crypto at an exchange, the banking system that is trying to protect their monopolistic behavior, that hates the thought of competition in money because they get to create digital currency every time they issue a loan, and privately created money like Bitcoin initially proved a big threat to certain banks. Fortunately, they've decided that initially they wanted to just laugh at it as a joke. Then they decided to try and corrupt it and co-opt it by using the word blockchain and building lots of stuff on blockchain and taking out the word Bitcoin. And now they've just joined us because they can't beat it. And now many banks are actually integrating it into their services. But you've got to be with a crypto-friendly bank. If you're with a normal clearing bank and you send some funds from one of these exchanges, you are at risk of them deciding that they don't want to serve you as a customer anymore. So there's a couple of things that I do. Firstly, I do everything via a trust structure. And so when I am trading in and out, I do it via a trust as part of my setup for my retirement plan. But when I own the private key, I've actually gone through the process of making sure that I've got audit trails of what's known as source of funds, source of wealth. This is a really boring subject, but it's important. So you need to have a trail and a record of how you got the money that you originally invested, and then prove and be able to prove that you didn't achieve these funds through illegitimate methods. And so the auditing and the accounting trail of what you've done helps. You also may want to open with a crypto-friendly bank. So one of the things that we do in our retirement plan B customers is work with them on sharing what they need to do to work with a crypto-friendly bank, make sure they've got the audit trail, and also look at structures so that they can actually compound in the long term, and do this in a way more simplified fashion than that. But yeah, this is a challenge in our industry. So you might want to be working with crypto-friendly banks, and then from your crypto-friendly bank, you can transfer to your normal bank. And also you might want to look at other structures, which is a deeper subject that we might have to cover in future episodes. So thank you very much for that question.
Okay, second question is, what would you suggest for a 51-year-old disabled nurse to put her inherited IRA money into? It's the only money I will have for the future. Thank you. Question from Anonymous.
So I am a qualified financial planner. I did do my financial planning qualifications way back when. I think it was maybe 20 years ago, maybe 16, 17 years ago. I can't remember. But I'm not able to give you individual financial advice for a few reasons. A financial planner and a financial advisor has to really sit down, understand your age, your circumstance, your debt, your current IRA, what type of financial products you have, what insurance you have, what structures you've used, and what liabilities you have, whether you have a mortgage, whether it makes sense paying off your debt. All of those questions completely come into that. So I help. The first thing is make sure that you have done that work of understanding your personal financial situation. One of the things we do with our retirement plan B customers, give them spreadsheets. They put together all their assets, all their liabilities, all their cash flow, and they come up with a cash flow statement and a balance sheet. And then they need to consider their stage of life. So if you already have an IRA, you may want to roll over that IRA into some kind of product that allows you to get exposure to this industry. In terms of how I am investing, that's exactly what I covered at Retirement Plan B. And that was the 4-part video series and sharing exactly how I'm doing it right now. But what's right for me at age 40 may not be right for you and my personal situation. And so you're going to have different allocations. So is this your retirement money? Is it your security bucket? Is it your compounding bucket? And therefore, I really split these things. So unfortunately, I would love to give you some kind of generic advice, but that generic advice would just not be fit for purpose and really do you a disservice. So we created that Retirement Plan B program to guide people so that they have the information so that they can then work with their advisors, translate exactly how it fits in with them, and all the different structures and various other things. So sorry, I just can't give you that particular advice, and it would be very irresponsible of me to do that. But we can give you education and information so you can make your own decisions. And that's what we've done.
All right, next question is from Christian. What would happen to Bitcoin if central banks would have to go back to a gold standard for any reason?
So if central banks went back to a gold standard, firstly, we would enter the Great Depression of the 2020s in a bigger way than you can ever imagine, because that would force central banks to curve their debt, and their debt is what's holding up the entire economy right now. And so therefore, ever going back to a gold standard is just simply not feasible. We are past the end. They'd have to hike up interest rate, send the economy into a dire depression. They'd have to deleverage, and then they'd have to curve and reverse all of the trends that they've been going through. But let's take a theoretical thought experiment. The governments could not issue as much money as they wanted to, and therefore it would deplete their gold reserves and cartel some of the debt that could actually be created within the economy. Well, at the moment, the private banks create digital currency. So they could lever up the private banking sector, and the private banking could circumvent many of those requirements. But if we did that, again, we drive more risk and create a 2008 style event. We'd have to get through the recession and depression. So a way more likely outcome is that we move more towards bigger and bigger governments, emerging of the central bank and the treasury, and move to more of a global reset style monetary theory, central bank digital currency led type environment. But if we did go back to that, and there was a gold standard, I still think that there would be a demand and need for Bitcoin, because Bitcoin serves as a speculative store of value, not a store of value. So individuals are speculating that Bitcoin will become a store of value. If it does become a store of value, then it could serve the purpose of doing a Bitcoin standard a lot better than a gold standard could do, just because of its digital nature and its ease to transport. So you hear about countries like Venezuela who store their gold at the Bank of England, and the Bank of England, due to sanctions restrictions, is just simply not giving Venezuela access to their gold. That's because it's physical. So if you did this in the digital realm, firstly, Bitcoin has a tighter supply. And you can have programmable money so that people can collateralize it, and you can't have the Bank of England reneging on their agreement with Venezuela because it could be integrated into some kind of smart contract programmed into that, making it a superior mechanism for achieving a similar result. But so that's why I think that a Bitcoin standard, once we get to this stage, is a more likely outcome. But I think it would be a Bitcoin standard integrated with central bank digital currencies, and gold will serve its purpose that it has, which is as a store of value, the purpose it has for 5,000 years. And Bitcoin could be a more efficient digital form of doing that. But Bitcoin has its downside. That is, there's certain times when you want the physical, because if we're having challenges with internet, with satellite and various other things, then you want to hedge your Bitcoin as well for the physical. If we enter into some kind of crazy event, your physical gold is things that you're going to want. But most people don't have physical gold. They hold it with a custodian. And when they hold it with a custodian, if they need it during a time like a pandemic or a global pandemic, then they tend to have a challenge because there's not enough physical gold to back up all the paper gold that's been created through the financial system and the futures markets. And therefore, there's always a short squeeze on that. Plus, if you can't get to the location you're there. So diversification is the key there. But I just don't see that scenario. But if we do go into a gold standard, still think there's a purpose for Bitcoin. But we'd have some speculation on that.
All right, great. Just a quick one. We've got about 500. Sorry, 1 second. Yeah, we've got about 400 people watching. What I'd like for people to do, because I'm getting a lot of questions come through on the chat, what we're encouraging everyone, because not everyone's familiar with this platform, but Slido is pretty good in the sense that everyone has a democracy. Put your questions through, and if that will get upvoted. So you can see there's a number of questions here. There's about 5 upvotes for each of them. And we've got a lot of people who've got questions to submit. So scan that QR code or go to Slido, and just enter #ST5. All right, so the next question is from Boris Sturgeon. As we succeed in the crypto world and our wealth increases, what are some good entities, unions, companies we could invest in to protect our free speech and our freedom for ourselves and our friends, families without relocating?
So we talked about that in this set. So I invested in many different Bitcoin and crypto companies, and I built a diversified portfolio. And the whole, privacy encryption centric is if you're looking to invest in those, there's many companies in our industry, and we get many plays there at Bank to the Future as well. So I invest in the private markets. I build a diversified portfolio there. Because I prefer to make the returns in the private markets before they go public, which was the topic. And maybe you joined a little bit later, but that was the topic in the beginning. I don't want to give specific company recommendations. It's all about diversification. It's all about thinking in terms of portfolio.
Okay, question from Azad's alter ego. I put that out, but clever Dicky. Simon, if you had no traditional or crypto investments, which would you buy first?
If I had no what?
If you had no traditional or crypto investments, which would you buy first?
Oh, that's an easy one. Crypto. Next question.
Right. Question from Boris Sturgeon again. Central bank digital currencies will eliminate cash and allow governments to control and oversee every single way we spend our money. It also makes it much easier to deny access to exchanges or interact with crypto institutions, buy and sell. What is your forecast?
That is correct, but I don't think it makes anything easier because we already have digital currency. So fiat currency is 97% digital already. So they have introduced anti-money laundering laws and regulations. So it already exists. Now, central bank digital currency means that they can use AI, they can program it in, but I don't think they will use that to ban the crypto markets. Now, while that is a risk and is something you need to consider, but I think that governments are more interested in tax collection than outright bans. And so now it's more and more integrated into the financial system. All the trend that I see is no movement to banning and all towards regulations. And regulations then lead to anti-money laundering, laws and anti-money laundering laws are code word for tax collection. So why would you, kill the goose that lays the golden egg, as we've got a market that's going $1 trillion and beyond, when you can use that as a mechanism for collecting additional taxes in this new asset class. So I do think that half of it is a fake worry. Obviously, it can happen. You can never say never, but also global coordination, I just don't think is likely. I think in currency wars, which is what we're experiencing right now, one currency's demise is another currency's opportunity, and Bitcoin is the perfect way for a central bank to wage a currency war on another country, another currency. And I think that will be used as a tool and weaponized by governments, rather than actually doing an outright ban and not tax collecting and not using regulations in order to try and do that. So.
Hi, Simon. I'm an investor of Bank to the Future, but I don't understand what to do inside the bank. Is it possible to receive a newsletter to understand how it works?
Sure. So Bank to the Future does send out a newsletter. Make sure you're subscribed to that every time there's a deal that goes live. And we want to kick off our Bank to the Future live sessions again. We took a bit of a break because we were working with our retirement plan B customers. But maybe we'll, on our Bank to the Future YouTube channel, we got plenty of videos and guides on how Bank to the Future works. We've got over 100 episodes of BF Live, and you can start going through the Bank to the Future YouTube channel to learn a lot more if you want to catch up on the archives. Yeah, we need to do more on helping people understand. It's not a bank. It's an online investment platform for building a portfolio of equity. You can buy shares if you're a qualifying investor and build a portfolio, as we covered on this episode today. We actually as well will be making some announcements next week, so that you can really implement, not just we've secured some additional registrations that will allow us to offer some really cool integrations between crypto and equity as well. Really excited about bringing that to market this year.
Right, so next question is from Anonymous. What's your view on India and China ban on Bitcoin, and how would you hedge against that?
So both of them have, here's my perspective. So from 2013, I think probably 2016 is when I first covered this topic on my YouTube channel, when I talked about China's central bank digital currency, when no one was really taking it seriously. It's very rarely a ban. So firstly, it's not banned. People call it banned because they see a headline. So one government official gives their own opinion that they think they should ban something, and then the media pick it up and say, Bitcoin's banned in India. There is no ban. But I created a video where I interviewed Sunny Ray on Bitcoin Hard Talk that went through the whole story of the entire background of Bitcoin in India. Check that out on my YouTube channel, on Bitcoin Hard Talk. And we go through the whole story of Bitcoin in India. I also actually gave a live update. If you type in Simon Dixon, China, you'll see the videos that I recorded from China when exchanges were being banned, but not Bitcoin. And so really, in terms of what happens here, any kind of ban loses out on the opportunity and gives all the data of the exchanges to the countries that regulate it, like Japan and South Korea, for example, and then they end up reversing it. So they flip-flop back and forth, but don't believe the headline. The headline, Bitcoin is not banned in China. Exchanges are not allowed to operate there, but if you bribe the right people in the right place and the corrupt officials in government, then you can still operate your exchange there, which is why they still do. So it's not banned in any of these countries, in China or India yet. I'm not saying it can't happen, but it's normally one government official giving an opinion and then it doesn't get through.
Okay, question from Anon. Can US citizens invest in Bank to the Future secondary market?
They can sell their shares on the Bank to the Future secondary market. So they can invest in primary offerings. And then after a 1-year lock-in period, they can sell. But at the moment, we've got a US broker dealer within our group, but we don't have the license that would allow US investors to buy at this stage. And the US regulators are still trying to figure out what they're going to do on that side. So at this stage, you can't buy. US investors can't buy. They can only invest in primary offerings. And then after a 1-year lock-in period, they can sell.
Question from Anonymous. To invest in exchanges through Bank for the Future primary market, do we need to be high net worth, UK-based?
You need to meet the local requirement in the UK. And so you would need to be the definition in the UK is professional. And that relates to having a minimum number of investments that you made in the past. And they've got different criteria. And high net worth is one of those requirements. But at the moment, we're expanding our regulatory applications. We've got an ongoing application so that we can expand who can actually invest. But at the moment, we tend to be restricted to high net worth, professional, sophisticated, and there's various definitions. So you can go over there when you sign up, go to the certification section in the identity, and it will tell you if you meet those criteria, then you're able to make an investment. If you don't, then that's because your country is restricting it at this stage.
Why is everyone showing laser eyes in the crypto industry?
That's laser focused on changing the future of finance. It's a crypto meme. I jumped on board, but it's just a signal of your laser focus. It comes from some comments by Elon Musk. Look it up on Google.
Question from Marlon Martinez. How to become investor at Bank to the Future? As I failed the entry quiz, any advice?
Yeah, if you failed the entry quiz, then we're not able to take you on as a customer because we need you to understand the product before you can do that. So you can study a bit more on how private equity works. I gave you some of the different things, and you can retake that quiz. But you need to. We put that there because we need to make sure that you understand the product before you actually invest in it, because we really take it seriously. That we don't want people that don't understand what they're investing in. So we put that quiz there. Then, learn a bit more about private equity. Maybe ask some of the questions here and we can go through it as a topic as well.
Okay, just a quick one before I actually put through the second question. We really want to push this channel to its real big heights in terms of subscriber numbers. Simon, what are we aiming for, and why is it important for people to hit that like? We've got almost about 500 people. Usually we have more than that, but let's get people liking.
Yeah, if you could like, we've gone from 6,000 to 60,000 since we've been giving a bit more regular content. It's above that now, but yeah, we want to. Our next goal is 100,000, so help us get there. And then our final, not final goal, but our next goal after that is trying to get to a critical mass so that we can get to 1 million subscribers, because I believe that there's more than 1 million people that really need to know how to adjust to the future of finance. And maybe you know some of those people. So thank you very much if you've supported us in getting those numbers up.
Yeah, so if you're liking this content, hit the like, please. Thank you. All right, next question from Many Thanks Dukes. The UK HMRC have updated their crypto rules this week. Will low energy staking become a thing for Bitcoin?
So I don't see the connection. So firstly, the tax authorities are really starting to see the tax collection potential in this industry. So many of them are updating. So really thinking about tax is a good idea. It's why we covered in Retirement Plan B a whole module and brought in my personal tax advisors and tax advisors from US and different jurisdictions, so that you can get clarity on how it may be treated. so that you can then speak with your tax advisor and make sure that you do things in the correct way. But then I'm not sure of the connection to staking, and I don't think that Bitcoin's going to be moving to proof of stake. However, the fact that Ethereum is now moving from proof of work to proof of stake means that if Bitcoin ever did need to move from proof of work, i.e. there was some big critical challenge, the fact that Ethereum has done it means that there's a roadmap and a path for how to do it that Bitcoin could follow, but I don't think it will follow because Ethereum is infinitely more risky because the model's not fully determined and subject to change. And the reason that Bitcoin is the world's best shot at ever achieving digital hard sound money is because it doesn't change that much. So proof of work is a proven methodology. At the moment, the top two cryptocurrencies use proof of work, but we're now getting the first experiment of moving from proof of work to proof of stake. If you're not familiar, proof of work is the process of mining where you burn electricity to prove that you are securing the network, and you get rewarded with newly created Bitcoins and transaction fees in Bitcoin. Proof of stake is a methodology where sometimes it can't work. It does work, but there's challenges. Like if you hold a certain amount of tokens, then you get more say and control over the network, which can be challenging because many people hold their crypto on exchanges and the exchanges can influence things. And there's lots of different ways around that, but it's an unproven, exciting piece of work. But you receive, by staking your tokens, you receive rewards in those tokens. So if you stake ETH, once it makes the switch, then you get newly created ETH as a reward just for holding them. Okay, I reckon this is the last question then, Azad.
Yeah, question from Anonymous. What is the major difference if it comes to evaluating a business between non-standard models for companies like IBM, Coca-Cola, etc., and this new sector, companies like Kraken, Coinbase, etc.? Thank you, Simon and Azad.
Awesome way to end with a great question relevant to what we covered today. So we'll take this as the last question. That is one of the challenges of private equity. It's very hard to value the company because the data is not public. So you can't, because the financials are not public, like public companies, you can't use things like price to earnings ratios or discounted cash flow models that are traditionally used by financial analysts and investment banks in the public markets. So you have to use comparables, and really at the venture capitalists, what we do, the model we use is that we co-invest with professional venture capitalists who work with the company to put together a valuation. They test the valuation by the venture capitalist that does it by career, investing their own funds. And if they invest their funds, then we co-invest on the same terms. So the valuation is set by professionals. But really, valuation is based upon comparisons, supply and demand, market. And there's no real good way other than the historical data of what companies can be worth in the future of doing that. So on Bank to the Future, we tend to co-invest with the professional venture capitalist and give the same terms in terms of valuation, and everyone gets to co-invest on the same terms. But you can look at the prices, but as we said, you can't be fully sure because the company could in the future. We may not have information rights to know about that, and therefore that can affect valuation. So it is a lot harder to take a valuation like you would for a public company. All right, so I hope you enjoyed that episode. That was a request that came. So several things you can do just in case you didn't watch the intro. Firstly, please do subscribe to this channel if you haven't done already. Hit subscribe, hit the bell symbol, hit all. Give us a like if you enjoyed the content. That will help us. And let us know in the comment section if you're watching this on recording, what you would like to see in future episodes. And join me on Twitter at Simon Dixon Twit if you'd like to hold me accountable as I'm trying to go through a body transformation stage at the moment. And I'm checking in every day from the gym, giving people a little tour of the home gym in these lockdowns, and covering one question each day on one topic. So look forward to seeing you there. And always remember, you are alive at one of the most interesting and exciting times in financial history. It's been disastrous for some. It's been awesome for others. And I want to make sure that you are on the right side of that change. So I'll see you this time next week. Peace. Have a great weekend.